It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Monday evening, March the 14th, 2016. No, do not adjust your clocks, folks. No, not again. Welcome back after daylight savings time. We have another exciting newsletter in store for you guys and gals tonight. We got crude, S&P, gold, and of course, euro starting out tonight. We got crude oil bearish with a spike in channel today. And with the time change over the weekend, something tells me most of the sellers missed that move down this morning and be looking for another opportunity to sell it after a correction higher. Got a pretty interesting plan there on crude. It looks like the stars are lining up for the black gold tomorrow. We'll take a look at it in a moment. On the S&P, the E-mini is bullish with a recent trap low into a bull channel, which tells us to look for buying opportunities at support levels on the way back up to the high of day for today. Another interesting scenario, low volume on the S&P, but really a nice easy chart for tomorrow on the S&P. Gold is bearish, but trading at the lows of a channel, which tells us to look for selling opportunities after correction back to channel highs tomorrow. And of course, we'll wrap up tonight on the euro. The euro is bearish with a spike in channel this evening, but it's trading at a key support level that tells us to stay patient for a correction higher for the most reliable selling opportunities tomorrow. I hope everybody survived the first day of daylight, or I guess the second day of daylight savings time. This is the day where everybody gets clobbered, right, with all the hangover, the jet lag of daylight savings time. That's all right. That's all right. After we finish up tonight, you'll be able to watch the sun go down. It won't be dark when you get home anymore. That's always my favorite part about this time of the year. And of course, that means it's going to be summertime coming right around the corner. But before I get ahead of myself, though, we got a newsletter to store for you guys tonight. Get a really great one for you guys as well. Got a good plan for tomorrow. Before we jump into our charts here tonight, I do want to remind you the only place to watch the entire full-length version of our nightly newsletter is on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, that's wonderful. There's a link right in the description of the YouTube video. Right? Remember that YouTube video is only a small portion of the full-length version on our blog. Follow that link. Come join me over here on sidewaysmarkets.com, and while you're here, grab a free pass to come out and test drive our live trade room here at schooloftrade.com. Get a free pass for you guys if you're not a member here at School of Trade. On the lower left-hand corner, you can register to join our nightly newsletter mailing list. Then you'll get an email from me every evening. Usually it's about 7:15, 7:30 p.m. Eastern Time, never after 8 p.m. Eastern Time. That'll let you know when the newsletter is ready to go. That way you'll never miss another newsletter ever again. Right below the video, there's a link right here. You can download all the charts that you'll see me using in tonight's video. How easy is that, right? Download them right there as well. And then over on the right-hand side, I'll encourage you to learn more about how we trade here at School of Trade, what it means to be a member at schooloftrade.com. We offer a lifetime membership. We're the fastest growing, longest running trade room on the planet. You can join our trial membership on the right-hand side. And last but not least, if you have any questions along the way, don't forget, I've always have someone standing by to help you guys and gals out. Grab the live support button right on the right-hand side of the blog. You ready to rock and roll? Hope you had a great weekend. Boy, I started seeing some of those Olympics commercials over the weekend. I do a little bit of TV time over the weekend with the family, and man, oh man, it really got me excited about the Summer Olympics. I wonder if my boy Phelps is going to be a good showing this year. I'm really excited about that. Hope you guys had a great weekend and hope you're enjoying. I know it's tough to say enjoying daylight savings time right now. Maybe tomorrow. We'll come back and talk about it again tomorrow. All right, let's jump right in. Tomorrow's Tuesday, March the 15th. Let's take a look at what we have for the schedule for tomorrow. Tomorrow, going from top to bottom here. First of all, we have the FOMC meeting begins tomorrow morning. Now, don't forget, we're not going to worry about that until the end of the day on Wednesday. So you shouldn't see too much of an impact on that tomorrow. Tomorrow should be a pretty darn good day. We get some pretty good news coming out. Again, don't let the FOMC meeting beginning fool you. We won't worry about that until tomorrow night's newsletter, and we'll talk about the plan for FOMC on Wednesday, right? 2-day meeting 8 times a year. We talk about that in the beginner's course here at School of Trade under our trading calendar. As you can see, though, quite a bit of news here at 8:30. We got the PPI, the retail sales, and the Empire State Manufacturing. I would imagine that will be very highly watched tomorrow, that manufacturing number, as well as retail sales. So big news there. We also have, of course, the 10 o'clock business inventories. The housing market's been a bit of a seesaw lately. Housing starts have been relatively soft, but inventory seems to be getting under control, right? We'll take a look at that tomorrow at 10 o'clock. Then we have that Treasury international capital, as we call tick flows, right at 4 o'clock tomorrow afternoon. That really is kind of a non-issue, as many of you already know. I always encourage my students get into positions in the morning, right, and then manage those positions, right, in the afternoon, just because the morning session, when the London and U.S. sessions overlap between 7 o'clock and 11:30 a.m. Eastern Time. For futures traders, that's where you're going to get the most reliable trading opportunities because there are professionals involved, there's volume in the market, patterns are easy to see, right? We talk about that in our trading plan here at School of Trade. So 8:30 and 10 o'clock tomorrow morning. Don't worry too much about the FOMC meeting until tomorrow evening's newsletter. We'll talk about that tomorrow. And again, I think tomorrow will probably be a day where things will be a whole lot peppier, right? Because if anything like me, man, that alarm went off. It went off about an hour or two early this morning, didn't it? Right. And we know it takes our clock about 72 hours to figure this stuff out, right? All right. Let's jump right in here today. Talking about oil, we'll go S&P, right? We'll talk about the gold, and then we'll finish up with the euro this evening. Crude oil is bearish with a spike in channel this evening, and with the time change over the weekend, something tells me most of the sellers missed this move down this morning, and I'll be looking for another opportunity to sell it after a correction higher. We have a time change, a spike in channel, and a trading range to work with this evening. The time change pretty much applies to all of these markets, except for the euro, of course. They won't change their times until 2 weeks from now, right? 2 Saturdays from now, or in 2 Saturdays. You get the point. The time change undoubtedly got most traders in the U.S., right, like myself. Sorry, I didn't mean to make you yawn there. Probably off to a sluggish start this week, and most of them woke up to a market that was quickly sliding downhill, and we'll be looking for a higher price to sell again tomorrow. Well, that's great because the spike in channel tells us to expect a bullish correction. Perfect, right? Back into the resistance zone up around that 37.80 area overhead, right? Here's your spike in channel, right? And of course, we're looking for a correction. The correction usually goes right up to the base of the channel to the first major swing, right? So the correction zone is hanging out right around that 37.80. Now, don't take your eyes off this area because as you can see, there's just a little bit of stuff up in there. We have a trend line coming down, right? We also have a major gap fill at 37.78. We'll talk about that tomorrow in the trade room with you guys. And you can see here another resistance trigger zone there, 37.97 to 37.73. This may also end up being a large multi-day, right, measured move tomorrow, just because we know that the spike in channel down, right, what we know about the spike in channel is we expect a correction back into the correction zone, and then sellers will be looking for a buyer failure, right, to sell it back down. Don't forget, though, if those buyers are successful, their goal is to get it up to 38.77, which is a spike in channel failure area up top here, 38.77, right? And of course, there is also a major gap fill up there at 38.50 for a target on the way. So that's if the sellers fail. So again, spike in channel down. I think the biggest problem with the spike in channel right now is going to be this bull channel that you can see us watching here right now. Pending bull channel. Usually what will happen is if we trade inside that channel, the only way we're going to be able to get away from it is if we break below it, hold the underbelly of it, right, and then see sellers attack, right, after using it as resistance. Okay, so that's probably going to be our best bet for tomorrow. We'll have to wait and see what it looks like in real time, right? But we're definitely keeping an eye on this area up here around that 37.63 all the way up to about 38 even. It's really difficult to tell how far it will go up, but that's what a spike in channel tells us. Stick to the downside right now. Look for a bullish correction into the correction area overhead. Look for buyers to try and fail, right? But again, like I said earlier, with this bull channel coming up here, the trend line that makes the low of that channel, that's going to be the kind of the thorn in our side, and we're going to have to get away from it. The best scenario would be a break below it, use the trend line as resistance on the opposite side, and then that will give us a clue, right? We also have a trading range down here. The short-term trading range that formed at the end of the day illustrates exactly kind of what I talked about before, right? The sellers clearly, by the time we got all the way down, right, kind of slid down here. It was about 10 a.m. Again, everybody came in what felt like about an hour too late today. I know I'm going to stop the daylight savings time commentary in a moment, but we're not there yet. So the bottom line is you definitely felt it. This morning you felt it. It felt like traders got to their desks. They're a little bit punch drunk, right, from the time change. And of course, European traders are going, where are these guys in the U.S., right? Those U.S. folks, they're so late. So it felt like they had missed it. And you can just definitely tell, if they wanted to keep selling this thing, they would have kept selling it. So this trading range definitely tells us that the sellers definitely held off the buyers for the most of the day, but they didn't have much conviction to the downside because, how do you want to sell down here without anything real big going on when you look left and you see all this move that you missed? So if it's me, I'm not looking to sell this low. I want to see a higher price, and so we expect that price to go higher. This trading range, though, not only does it illustrate for us kind of that feeling that the sellers kind of missed it and they weren't really excited about selling this low. It also gives us areas now of resistance overhead, mainly 37.39. We call these range expansions, and 37.71. 37.71 looks just delicious up there around the major gap fill in the correction zone. So, you can definitely still see it. It doesn't mean, though, that this 37.39 can't hold, right? And we don't get the same thing that we just talked about, right? Where that resistance area holds, we break below that trend line, right? Use the trend line, and off we go. Depending on where we end up retesting that low, what they're trying to do right now is get it back to that low. If they can get it back to that low, then the odds are very high now that, again, I don't know how high we're going to go, but we're going to get a big long-term measured move here to use tomorrow, right, for a nice runner target tomorrow. So depending on where it goes to, right, if this is all we get, right, then so be it. But again, I think that trend line is going to be our big hurdle here right now, right? Literally, and figuratively speaking right now, right? And then, of course, that'll tell you kind of how far down this thing's expected to go. Get some good resistance overhead. All we need now is to see the market turn. Don't forget, it's always going to be a failure, right, into strength, into continuations, right, as we go right back on down. And we'll be doing this live in real time. We'll be opening the trade room up with all of our students tomorrow morning at 8 a.m. Eastern time. Look forward to seeing you guys and gals there. Let's keep going, shall we? I want to keep this train moving here. S&P 500 up next. We're bullish with a recent trap low. Gotta love those trap lows into a nice bull channel, which tells us to look for buying opportunities at support levels on the way back up to the high from today. Right, the S&P is a trap low, an inverted head and shoulders pattern, inverted head and shoulders, we'll see a couple of those tonight, and a bull channel to work with this evening. Now, the trap low is always a reliable clue that buyers are interested, and you can definitely see the bulls just got all over those bears today. Market shot higher, right back to the highs after that trap low, right? So anytime we see a trap low, and there's a lot of different examples. We saw one last week on the S&P, right, where we saw a trap low of a triangle, right, where it trapped low and then, literally just shot, right? That's a trap low. Here's another example of a trap low, right? Bull move into a trading range, right? Right? Trap low, right? We see it trap below those lows, trap low, right? Shoot higher. It catches traders off guard. It causes sellers to enter the market, and when they get stopped out, they're buying their way. And of course, smart folks like you, right, like you, and I think myself, are waiting for those trades, right, as well. Right now, we have, right, now you can look back on it. Now we have kind of a scenario where, right, price went up, right, we kind of had this kind of head and shoulders scenario here, right, and right, there's your trap low, right? There's your trap low, right? So it's just, we're looking at an area of support where a price jumps below it and then immediately, people always ask me, how do you know it's a trap low? Look at the reaction, right? Trust me, if it's a trap, it's going to immediately go right back where it came from, right? You'll hear me call this a market mistake, right, in our live trade room, right? It kind of feels like the market said, oh, shoot, no, sorry, didn't mean that, let's go the opposite direction, it kind of feels like that, right? And so a lot of times what happens is there are stops sitting below that low, obviously buyers who have their stop losses trailing. And of course what happens is it'll force those stops out, right, sell them out of the market and force them to chase. The real reason why these trap lows are so enticing is because people who missed this move going higher here, they're thinking, oh, okay, well, I'm not going to buy it up that high, right? I'll buy it lower. When they get this chance, they're not going to miss that chance, right? They saw it, and this is kind of a gift from the S&P trading gods, right? And almost like a big flashing light saying, "Hey, hello, you missed it yesterday. If you want it again, do I have to put a bow on it for you?" That's why buyers jump all over it. It forces buyers to get out of their positions and then back in. It runs out the weak hands, and of course, traps sellers on the wrong side of the market, breakout sellers, foolish breakout sellers, because you can see this trend line sitting right there. But bottom line is there are some crazy sellers, right? That's what I probably would have